Good morning, all you lovely traders out there. It is Monday, August 12th, 5:30 a.m. Pacific, 8:30 a.m. Eastern. And we are kicking off another week in the markets. I'm Jonathan Van Kloot, and I want to remind you real quick to subscribe to the channel if you like these videos, if you find them useful or informational or educational or anything like that. Then please do subscribe and let me know if there's anything that you would like me to do differently or more of or anything like that. Throw that in the comments down below, and also give me a thumbs up on the video. Let me know that you liked it so that I can see that people are in fact appreciating this. It helps me too, but I'm trying to do this for others as well and kind of pay it forward. So here we have the S&P 500 and a daily chart on the left, and as I've been talking about, it's looking like we're going to get our next wave down. I've been expecting out of this a big A, B, and then a C move down. So buckle up, folks, because it could get bumpy. We might even take out this low here, maybe double bottom, something like that. But here's the real area to watch out for. This low back here. This low from basically June, end of May, early June, cannot be violated. That has got to hold. So that is our line in the sand. That is the area we do not want to see things get below. And my expectation is that that low will hold. But, I mean, what does my expectation mean? Really, nothing. So what we really need to do is just keep an eye on this move, and if it heads lower, which is what I'm expecting, we did retrace back up to the 61.8, and now we're coming back down again, and I'm expecting further downside, and just watch out for this, because if this level is broken, then we don't have a whole lot of area here that the market can safely pull down into without violating that low from before. So just be real cautious here. Be ready for downside ahead. If you've got profits and you don't want to get out, you want to hang on to them, maybe hedge them with something else, maybe play some short side to offset some of the losses from the longs. Or if you are only a long trader, I wouldn't really suggest, unless you're scalping. If you're just catching bounces and scalping a few points here and there, whatever, then sure, you can trade both directions. You can catch bounces. I mean, we had a bounce back here, for example, that could have been caught. Grab a little something on the after this push down and bounced up at the trend line, or excuse me, at the moving average rather. So you can do that kind of thing, but just be cautious. Know that right now, anyway, the primary trend is to the downside. So anything long, you are going counter trend at the moment. Bigger picture trend is still up. Really big picture though. We're talking, weekly, monthly chart. Big picture is still up. So just be real careful and be ready for downside ahead. Be familiar with how to trade that. You really need to know how to make money to the downside. If all you know how to do is buy and hope it goes up in price, that's a very limited set of strategies, and there's only so many ways that you can make money doing that. So it's worth it to learn how to do both directions for sure. Let's take a look at RTY. Basically the same kind of thing, same exact type of scenario. Market sold off, came down for an A, came up for what I believe is a B, and now is heading down for what is probably a C. However, RTY has a slightly different picture in that it already technically broke this low. But you can see as soon as it did, boom, the buyers were there. They bought it right back up again and pushed it all the way up to here. So as far as I'm concerned, that held from my standpoint. So just watch out for some further downside ahead. Obviously, if this market completely falls apart and gets all the way down below this, then we have a problem. Most certainly. Now, I don't think that's terribly likely because generally speaking, the RTY will get dragged in the direction of the broader markets, the ES, the NASDAQ, the Dow. And if all of those come down, bottom somewhere, like I was saying earlier, before that June low, which actually is like somewhere around here. Actually, it's probably this right here. If those other markets can bottom before that low and then head back up again, it will probably drag the RTY along with it. So I am not really expecting to see the RTY get lower than this, and certainly not expecting it to get lower than here. So watch for downside, yes, but I'm thinking double bottom probably before heading higher again for another move up. So we'll have to wait and see about that. I do need to rethink my wave counts a bit. I think I'm not going to do that right now while I am on with you, but I need to re-examine these. I need to go out to a much larger time frame and just take another look at these because I think they need some tweaking. Shorter term time frame, of course, you can trade both directions if you know what you're doing, but just notice, be aware that we broke. Well, actually, hang on, I zoomed in a little too far, got a little too carried away there. So we were stuck in this channel for a while, broke up out of the channel, but it was just kind of a fake out, and then headed down, and now have come back up, but tested the bottom of that channel, which is held as resistance, and now we're heading down again. So oscillator momentum is to the downside, the trend is to the downside, lower low, lower high. If we make a lower low, then clearly we're going to have a continuation of that, but as I said, I'm not really seeing that as a super high probability. Could happen, but at the moment I'm kind of thinking probably something approaching a double bottom down around this level. But I mean, hey, we'll see. It all depends on how scared the buyers are and how determined the sellers are, and that's all it is. If the buyers won't buy, then prices are coming down. If the buyers will buy and the sellers won't sell enough to overpower them, then prices are going to head up. It's just that simple. So we got to wait and see what the buyers and sellers want to do, and just be prepared, generally speaking, for downside ahead. That is the most probable setup, I believe, this morning, or for the next few days, really, for this week. I expect this week to be kind of down. We'll see. All right, crude oil is bouncing nicely. It did come down to break these lows here. I believe we're talking about a completion of the daily wave 5 here and the weekly wave C. And that was the wave B ending here, and then we have our 1, 2, 3, 4, 5, and I believe ending a wave C here. In which case, the next move is big time to the upside. So we got to get over this level in the near term. That's our really significant swing point to start heading higher from there. Then, of course, we got to take out that, and then from there, we definitely have some serious upside to come. Shorter term, anyway, price did get up into this sell zone here and stop pretty much dead in its tracks and retreat, but it didn't get too far. It basically got stopped at the top of the buy zone right here. So right now, just kind of sandwiched between the two, trying to head higher. Oscillator's pretty weak at the moment, so there's not a lot of upwards momentum, and on the daily, momentum is still to the bear camp. So we are, not out of the woods yet, so to speak. So just be cautious about this. If, in fact, this is the end of the daily wave 5 and the weekly wave 2, or excuse me, the weekly wave C of weekly 2, then yes, the next move is a weekly wave 3, which is a big, huge up move. But to do that, we got to first have a wave 1 and a wave 2 and so forth on the smaller time frames. So we could easily have a wave 1 up here and a wave 2 down maybe here or something like that, and then a wave 3 up, take this out. Now you know for sure this market is heading higher. So that's what you need to watch for. Just keep that in mind. You need to watch for that confirmation that the price has turned and is heading higher. So watch for that and be prepared to trade accordingly. All right, let's take a look at gold. By the way, it looks like I got a note from Cesar saying good morning. So good morning. Welcome to the channel. I'm glad you're here. I did see that. Just wanted you to know. So taking a look at gold this morning, gold has marched higher big time. For anybody who follows gold, saw this and got very excited. We got up over that 1500 level. Holy cow. Hasn't happened in a long time. That is great news for those of us who are looking to be bullish on gold or long any gold derivative product, anything like that. Now, very interesting. We are just kind of going sideways here, but look at this, the 1500 level. Very significant psychological level, and at the moment it's holding. I mean, you can see buyers this morning have pushed price right back up again. You can see it right here. We had price coming down, form a nice little sort of a doji, kind of a fat doji, but a doji nonetheless, and then push the price up higher with strength and momentum. Oscillator on the 60 has gotten over the 0 line. Oscillator on the daily is continuing to head higher, so this is looking very good. Of course, it means nothing until we get over this level here. We've got to break this high. That is definitely our key. And frankly, at this point, with the oscillator being way down here, I mean, look where the oscillator was when it was at that high. I have a feeling this next push up we're going to have a divergence, which is what I would expect to see happening at the end of a wave. So we've already reached the 61.8 level, which is the lower end of the range of what I'm expecting out of a wave 5, which is what I suspect this move is. But 61.8 to 100%, that's the range we're looking for. So I do believe there could be a little bit of upside ahead. But with that big divergence there, if that does happen, I'm thinking we're signaling that this move is about finished. So at that point, we're going to be looking for a pullback, a retracement, correction, and then you want to take a look at your larger time frames to see what the market might have ahead ahead for us. So if this wave 5 ending is the end of, say, a wave 1 up, and this pullback is the end of a wave 2, then the next move is a wave 3 to the upside. So I'm not saying that that's what it is. I would need to zoom out and take a look at my much larger time frame, which, oh, I forgot I had already labeled the chart. So there we go. Week 1, week 2, and now a weekly wave 3 up, in which case next move would be the weekly wave 4 and then a weekly wave 5 for a final push. So I believe there is upside ahead in gold, but this move is getting a little tired. I mean, really, it started way back here in about, what is that, August-ish, August, September or so of 2018. So this move is extended. It's got some room to go. Like I said, there could be still a wave 5 ahead, but it's looking like it's starting to kind of run out of steam, at least for this leg of it. So if you are looking to be bullish gold and have not established a position yet, be cautious at this level. I would ideally wait for that pullback and then look to get long from there. Of course, if you're a day trader catching these quick small moves, they're always there and you can grab them. But you better be able to get in and out quick and just be prepared to protect yourself, because when things start to move quickly, they can hurt you and hurt you in a hurry. So be careful. All right, let's take a peek at natural gas and poor natural gas. Man, look at this. This is just brutal, and this has been going on forever. I mean, since much further back than my data even shows here. I mean, look at this. It's just from all the way up at 30, 31, 32. I mean, natural gas from there is down at 2. Natural gas can't catch a break. It's just brutal. So right now, stuck in this descending channel here, just bouncing around in there, and sure enough, it bounced from the other day. It bounced off of this low, gave us a little hammer, and now it's kind of just drifting higher. But there's just nothing to get excited about in this market yet. I do believe that it is bottoming. I think we're seeing bottoming behavior here, this big protracted diagonal move down. And look at the oscillator, just getting stronger and stronger and stronger, and gradually starting to peak above the 0 line. So I do believe that this is accumulation happening down here, and that we're going to see a break higher sometime in the near future. The question is, how near is that future? We just don't know that yet. Right now, it's got a ways to go. It's got to get over this high to even break the previous lower high. So that would be this here on the 60-minute. It's got a ways to go. It's got some mountain to climb, but it is working on it. I mean, you can see here on the short term, we're getting some lower lows and some lower highs, or excuse me, some higher highs and some higher lows. The oscillator momentum is low, but it's wanting to stay bullish. There's more momentum to the bull side than to the bear side. So it feels like bottoming behavior to me, but it's not bottomed yet. So just beware of that. There could be further downside ahead. How low can it go? Well, I guess to 0. That's about as low as you can get. But be prepared, because I think when this does finally break out of this, we could see a big spike. Peak at Bitcoin. And Bitcoin, it's interesting. Bitcoin is usually thought of as kind of the proxy for the crypto market as a whole. But frankly, most of the crypto market hasn't seen much benefit out of this beautiful bull run that Bitcoin has had. It's been all Bitcoin. And I have some theories about why that is. I actually think that makes a lot of sense given the amount of institutional interest there is in getting into crypto. And those institutionals who want to move 1 or 2% of their assets into Bitcoin in order to have a non-correlation with the rest of the markets, they can't put that kind of money in the small coins. They can't even put it into something like Ethereum or Litecoin, and they certainly can't put it into something like Ripple or Stellar or any of those guys. There's no way they can't put that kind of money in those. It would blow those markets through the roof. So Bitcoin is really the only safe haven for their money. It's the only place that has the kind of liquidity that they need to be able to just gradually sneak some of their money in there. So I think that's what's propelling this Bitcoin rally to the almost exclusion of the rest of the crypto market. It's just not in lockstep at all. So that being said, at the moment anyway, I do believe on the weekly 3 we finished our A, B, C down, and then we started a new 1, 2, 3, and 3 is looking like it might be done actually. I was thinking it could have some room to the upside here, but we did just barely almost reach the 161.8, which is the lower bound of our target zone for a wave 3, 161 to 261. And we got just almost to the 161. So I was thinking that with this little triangle here, if we can break higher, then that would signal that wave 3 is probably not done yet, and we'd be looking for maybe 100% extension of this even, basically with this being a flag pattern. And this could still be a flag or a pennant, whatever you want to call it, but you know, you've got kind of a flag kind of thing going on here. So it's possible this is still a bull flag forming. We'll have to wait and see. Certainly, if this low gets taken out, then this is becoming less and less likely by the moment. We really need to see this market break to the upside for this to signal continuation. Otherwise, it just becomes a wave 4, which is not to suggest there isn't a continuation. There would be. But if this is a wave 4, then the next move up is a wave 5, which is now not ending there. It would be ending like somewhere around here. And so we'd be looking for something around the 61.8 to the 100% extension in here. And the 100% extension overlaps almost perfectly with the 261.8 of this wave 3. So that is looking like an interesting potential target. Also, of course, there's a resistance area right up at the top of this peak here. So I would not be surprised to see maybe that 14,000 level or so give Bitcoin some real trouble. I was kind of thinking that it could be higher than that. I was looking forward to wave 3 ending maybe somewhere up here around that 14,000 mark, then wave 4, and then wave 5 pushing up maybe closer to all-time highs. And who knows, maybe we still get that. But at the moment anyhow, it's kind of looking like it's running out of steam here. But there's also just no real momentum on the 60-minute chart. I mean, there's just really nothing there. And momentum is very, very weak by comparison to where it has been recently on the daily. So I'm not worried about Bitcoin collapsing anytime real soon. Everything is still looking like we've got some upside ahead, but not maybe as much as I was looking forward to or projecting. So we'll have to wait and see, give it some time. Right now, nothing is falling out of the sky or anything like that. Like I said, we do have what could be still a flag pattern here, which also could just be the wave 4 retracing. So we'll just have to wait and see. But keep an eye on about that level there, because ideally the wave 4 really shouldn't pull down into the wave 1. If we get a little bit of wick coming down in there, a little bit of candle tail, that's fine. I don't have a big problem with that. But certainly if we get a candle body coming down into this, then I would be very suspect of what that could mean, because that would mean it has violated the wave 1, which changes my interpretation of things a bit. So, but all of that is just ifs and maybes. So we'll have to just give the market time to shake out and see what happens. All right, let's pop back over to S&P real quick, see what's going on. All right, this second, buyers are trying to push things up. So we'll have to see what the opening bell gives us in 40 minutes, 39 minutes now, and see if the buyers are willing to step in. There's been a lot of nervousness in the market. The VIX volatility index has been spiking up a bit. Things have been a little nerve-wracking, and the buyers have been not too confident in buying up this market for understandable reasons with everything that's going on in the world. So we'll have to just watch the charts. I don't watch the news. I don't listen to news. I don't care about news. It's all shown in the charts already. I don't really need to know the why, other than sometimes I'm just idly curious. Other than that, just stick to the charts. Stick to what's there, and as the saying goes, trade what you see, not what you think. Sounds so simple, but it's challenging for sure. All right, that's it for me today, for this Monday. I will be back again to do this on Wednesday, so hope you can join me then. And reminding you to give me a thumbs up on this video if you liked it. If you got something out of it, let me know. and throw any comments down in the comment box and say hello. And I'll, like I said, be back on Wednesday. So until then, trade well and take care. Bye bye.